afternoon, and welcome to A Better Customer Experience, How to Harness Data and Drive ROI to the Bank. We're going to talk data and wealth management today with a financial technology company and with a banker in charge of wealth management. We're going to talk about wealth data, growing client relationships, and increasing engagement. We thank you for joining us. I'm Naomi Snyder, Editor-in-Chief at Bank Director. I'm in charge of all of our editorial coverage, including a quarterly magazine and a weekly newsletter that comes out on Saturday. This webinar is brought to you by both Bank Director and Wealth Access. Bank Director is an information resource to the financial community. We focus on strategic issues most fundamental to a bank's CEO, senior leadership team, chairman, and independent directors. Wealth Access is an enterprise customer data unification platform that works with existing books and records to generate hyper-personalized banking and wealth management experiences and insights. We're going to find out what all that means shortly. Before we get started, let me share a few things to keep in mind. First off, don't worry, we can't hear you. You have joined this webinar in listen-only mode. If you have questions for our speakers, please note them by clicking the Q&A button found on the right side of your screen. You can do this at any time during the presentation. Once our presenters have finished with their talking points, we'll have a Q&A period where those questions will be addressed. There is no need to take detailed notes, as the presentation will be shared with all attendees within 24 hours via email. It will also be available on bankdirector.com. If you have any technical issues, you may also note those using the Q&A button on the right-hand side of your screen. Our team will email you a solution via the email address that you registered with, and we'll do our best to take care of it. Finally, the opinions expressed in this webinar are those of the individual speakers alone, and they don't necessarily reflect the opinions of the other speakers or their entities. On that note, let me share a little bit about our speakers today. David Benskin is the founder and CEO of Wealth Access in Nashville. Prior to founding Wealth Access, he acted as first vice president of investments in the Global Wealth Management Group of Merrill Lynch. Jamie Hopkins is executive vice president and chief wealth officer at WSFS, which has $87 billion in assets under administration. The banking company has long served the Philadelphia and Delaware markets, but is in other states as well. Prior to WSFS, Mr. Hopkins served as managing partner at Carson Group, where he grew their private wealth management business. So with that, let's get started with our webinar. So David, I wanted to start off with you. Maybe you could, before we get into the data portion of this discussion, talk about why you think banks are particularly interested in growing wealth management.
Thanks, Naomi, and appreciate the opportunity. We recently had an opportunity to get together with about 21 banks in Nashville at the Wealth Access Executive Summit. And the message was clear. It's a peer-to-peer discussion led by CEOs, COOs, presidents, heads of wealth of various community regional banks. And wealth management is one of the key initiatives on their strategic initiative, and it has been. I think that what the group was focused on really was around the bank's balance sheet in terms of looking at fee revenues. Wealth can be a key driver. It's a low capital requirement business, and it represents a significant growth opportunity for banks. What was interesting that we found at the summit is that there's typically a low percentage of retail and business bank customers that are also wealth clients also. So it presents an opportunity for the bank to really capture and really be able to advise their clients through the entire journey, from banking and credit card, their first mortgage, to starting a business, to really into wealth management, to provide them advice to achieve their goals. From a financial perspective, what the group stated is that based off of some of those numbers, capturing what's in their own four walls within their client base represents a significant revenue opportunity. I think the group agreed that somewhere in the ballpark of 1 or 2% represented about 20 plus $1 million of potential fee revenue. So it represents an opportunity for banks to really serve their clients, to support them throughout their client journey, but also to drive growth for banks, which is really important given some of the macro conditions that are going on with interest rates being higher for longer, deposit rates being higher than they were previously. So it represents, what we view as the largest untapped opportunity within banks.
Yeah, yeah. And so, Jamie, you were brought in to kind of help with this over at WSFS, right?
Yeah,
So,
so
tell us how
good
you
to
hope to
see you.
accomplish growing the. Good having you on. So, tell us how you hope to grow this and accomplish more wealth management at your bank.
Well, it probably fits that I halfway interrupted the question because I think that's why I was brought in was just to run forward and figure things out. uh, but yeah, my background for a while has been kind of sitting in this technology and RIA wealth space, and so coming in, a little bit of the charge of the bank is to figure out how to make wealth management in the banking world a little bit more like the leading edge of wealth overall. So banks have been kind of followers in the wealth space to a large extent. Not every bank, but I'd say overall, and David knows this well, we've been trying to play catch up in the bank world to where some of the RIAs, the custodians, some of the tech forward wealth firms have been for the last decade. And so were really transactional in the past in a lot of areas of the bank. Now you go to some community banks, and the kind of commercial bankers are very relationship driven. So pulling that relationship aspect that worked really well in community commercial banking over to the wealth world, to get away from products, to get away from transaction based approaches, and more to what we've seen in kind of the fiduciary space of building long-term relationships, working with children, grandchildren, multi-generational, true financial planning is really where we're moving. So that's the charge. We've made a lot of progress. I've been here about a year. I'm super proud of the team and where we've gone. And as David also mentioned, right, there's fee pressure out there really on the whole world, but on the banking sector, especially with rates coming down, it does challenge banks to figure out how do you find more fee-based revenue that isn't as interest rate sensitive. That's healthier for the bank. It's healthier for the clients and the customers out there, and really for our general markets, because you get more stability then in the financial institutions with broader kind of income sources versus relying very heavily on rate sensitive assets.
Mm-hmm. And what are your goals in terms of wealth management? Can you talk
Yeah,
about that
so
or not?
this one's publicly stated, so it's good.
Okay.
My goal is to double this business over the next 3 years. It's a big goal. Certain areas of our business have been able to, I think are on that path already. Some still have work to do, but that's the big goal. We want to double our wealth business and really that fee revenue over the next 3 years. There's a very good path to it. I think we've made a lot of the progress, towards that. It's something we've publicly stated that that's the goal. Now, inside of wealth, that's always a great question. But then what does that mean inside of it? I really do have 7 different wealth business lines. So when you peel back, and if you're a bank or somebody in the wealth world listening, that's where it gets really complicated, because we have 2 different trust divisions inside. We've got corporate trust. We've got true kind of traditional financial planning, wealth management, and RIA. And it does require us to grow all of those. There's not one that could, 20x and carry the weight of everything. So it really is figuring out how to holistically serve clients and grow that whole portion. So it's not just one area we're focused on. It really is that holistic approach to wealth management. That requires having great talent. I think out there today, great companies have great talent. And so you have to attract and retain and develop people. You can't just play in one of those 3. You've got to figure out a way to do all 3 so people see a future at your business. They want to grow with it. They want to progress. And, in doing that, right, you do provide a great service for the world. Sometimes that even means people develop and they leave, and you got to celebrate that too. I love the saying red carpet in and red carpet out. So if I have a number 2 that goes off to lead some other organization, that's great. I'll celebrate that just as much as I should celebrate any other win.
Yep, yep. Yeah, so that kind of sets the stage. We'll talk now a little bit more about data because that's, the purpose of this webinar. So the way you're trying to build this business from a data perspective, can you talk about what you're doing and how it's different from what other banks do?
Yeah, we actually kind of took a backwards approach to the data to some degree. And, what I mean by that is we actually partnered with Wealth Access, probably one of the reasons I'm on here. And so I work closely with David and his team over there. And that is our, overlay for our client experience to pull in the banking data, the wealth data, the trust data, all into one place. And part of that was, hey, here's going to be the experience. And then it really forces us to get the data in a format and cleaned up and kind of agreement on how that's going to look across the different sectors of our institution to make that client experience and technology work. Some people kind of go the opposite way and they say we're going to spend years working on a data lake or some type of data mine where they're going to put everything, and then once we finally have clean data we can take it out to the world. We kind of said, well, let's go figure out what we want that client experience to be first. And then that's going to force us to have that consistency and adherence on the back end to that experience. So it's a little bit backwards than some other places have gone, but to us, it was the right move. And it's, I think to a large extent, it's actually accelerated our data kind of timeline versus really dragging out. I've been on record on this a bunch. I think the data lakes on multi-line businesses are really hard to do. I think in a single line business, it's a great approach. Once you get to like my world, 7 businesses just in wealth, it becomes very hard if you're just going to try to build out that data lake without the client experience front and center to get there. I think it takes a lot of time, a lot of wasted money. So we took kind of the backwards approach to that, which I think has been really good, starting client, working back into our own data.
Right. And what does that look like? Like there are all these different silos in your typical bank, right? Like the wealth management person might not have access to the banking, the transaction data, or it might be hard to get that. So what does this look like from a data perspective for you?
Yeah, and some of those things are going to be true due to regulatory natures, right? We have affiliate companies that sit underneath the holding company. They're separate companies. We've got to adhere to those data restrictions that are going to be out there, especially from internal sharing. Now, on the front end, though, clients can opt in to share essentially have their data shared to them in a singular view. And that's really how we looked at it. So there are still going to be some silos inside between different advisors or trust officers. And I would argue that that's still a good thing, right? There's reasons that some of those regulations and rules exist, and that there are reasons that like a Delaware trust company is separate from the other organizations. That's a good thing. But from a client perspective, they get to see that single pane of glass and they get to understand where their holistic picture is. And to me, that's really the important part. Now, pulling the data in and better understanding where a client is, understanding their whole world is a very useful thing. It allows you to better serve somebody. But some of those restrictions are always going to exist. I don't expect for all those silos to break down, but it's how do you wrap something around it so the silos are coordinated for a client view? And that's really where we ended up partnering with Wealth Access and bringing that in, as we thought it was the best out there for the banking and wealth world to pull that together.
Mm-hmm. And how far along on this project are you?
Well, we are up and lodged in it. Yeah, all of
Okay.
our clients do have access to it now. Like any technology program and rollout, right? There's always day 2 punch items and day 3 punch items, and you should never be satisfied where you are. I actually said that one time to a team. I said, they said something like, "Well, you don't seem like satisfied where we are," and I was like, "Well, I'm never going to be because there's always another variation of it down the line, right? And you're going to have to keep adding to it and thinking about what's the next thing, not even what's right in front of you to do, but what's 2 items down the line." I think the best coaches, best business leaders out there in our world, not just in our industry, are always thinking, right, 2, 3 steps ahead, and you're building towards that. So you don't want to just try to jump all the way to that one, but you've got to be thinking 3 steps ahead. So what you're building today and tomorrow is leading you to that path where you want to be in 5, 7 years.
Right, right. And so how can you tell me about what some more about what you've accomplished so far and how it has impacted sort of fee income for the bank.
Yeah, so I'll do a quick overview of the last year. We've done a tremendous amount of technology, I just say overhaul, almost across the entire wealth business. It's shifted. So we launched a new CRM for, I'll say more of like a global CRM. So the bank world, the trust world, and the wealth world are all on one CRM. So we've leveraged Salesforce across the organization. A lot of firms are in that world. But that does help understand just single household point of contacts, helps with the referral aspect of the pipeline to be able to track all that effectively. And one of our stances is if it's not on Salesforce, you don't get paid on it. It's a very straight mantra now. And, my team's got to hear it as much as everybody else. But I've been asked a couple of times, like, well, how do you get adoption? That's how you get adoption, right? There's not much more of a magical trick than that one. So CRM is kind of the building point up from the bottom. On the wealth side, we did move, again, public information to SEI's SWP trust platform. So we're on 3 different trust accounting systems for our trust business. We migrated to one for corporate trust, global capital markets, and personal trust. That's a big kind of move. That was tied together with our wealth access rollout, for better or worse, because we had so much data, as you mentioned, about 87 billion in AUA in the trust business that needed to be projected out through that connection point. So we kind of aligned those together. We also moved to Orion, which is our trading kind of portfolio management system across all business lines that really touch the investment world. So again, kind of pulling that together. And then we launched, I think, about 7 ancillary technology pieces for the wealth business. Halista Plan, which is a great tax planning service. Y charts, which is a really fun kind of modeling. And you see them used a lot on showing where the markets are going. Really great software. Endeavor, which is a 401k kind of platform. I'm going to miss some here, but I was like rolling through. Pantera allows you to bill on held away assets, again, something that we pull in now to our data and allow clients to be able to see. So really great movement. I mean, you look at that over the course of this was all done in the last 13 months. So a lot of people have asked me, as I move from more of a tech forward company into a bank wealth business, can we still move at that speed? And what I will, challenge any wealth or bank firm out there, we were able to do all that in the course of a year. Now, it's a lot of work and there's other scoping that needs to be done. But we really moved a tremendous amount from the CRM to the client portal to the ancillary tech inside to our trading and trust accounting system all over the course of a year. And on top of that, we launched a new website. And all of that was kind of planned out in phases. So some things, we kind of wanted to stagger. This comes first and then the second part comes afterwards. But really proud of the team. I mean, it takes a lot of coordination, a lot of project management, and a lot of, tough decisions. Leadership's got to make decisions and hold people accountable for it. As soon as you start making too many exceptions out there is when projects like this fall apart. And so you got to make the tough decisions, stick with it, and have consistency on how you're going to make data decisions moving forward.
Yeah, I mean, it sounds expensive, right? So what is the ROI that you expect from?
Yeah, so the ROI we will go back and retrack. So as most banks look at this, they do a stated ROI before they enter into a project plan, and we had one of those presented to the board. We will do a look back. What I will say is we're probably from a true number on that, probably too early to tell what the actual ROI, at least from the project's going to be. But for us, this is probably sometimes unique, sometimes not. Being able to simplify down the number of systems we are sitting on there's a lot of cost savings and efficiency that comes from that. I mean, just to mention, like 3 trust accounting systems, having people cross-trained across 3 systems, paying for 3 systems, there is a lot of efficiency to pull into one. We had numerous ways for clients to go access their data here, now really having one way for them to look at it. Those things, while you can measure some of that, some's harder to measure, but we will do the look back. It's something that we have guaranteed our board and investors that we will give an ROI look back on this. So we will do that kind of at the appropriate time. We're about 3 months out from the last part of all this conversions in September. So I'd say so far so good. We've put out some releases to the investors and the markets about, just successful conversion on time, all those fun things. But we will do that ROI look back, which I think is important.
Yeah, definitely. I'm sure they'll be asking you, right? The board and the CEO will be asking you. So I'm sure people will, if you have any questions for Jamie, put them in the Q&A box, and we'll get those questions over to him. So David, a lot of banks are thinking about data projects right now. I'm wondering if you can talk about what just on the basic level, what's the kind of data that banks have on their customers, and why is that valuable?
Yeah, I mean, so what we have seen with banks, it's interesting hearing, Jamie referenced the 7 business lines. If you think about a bank, at least the way we see it, there's 3 primary verticals between the retail bank, the business bank, and then wealth. And then wealth may have trust, private wealth, RIA. Maybe they outsource their brokerage business. They may have multiple business lines as well. Where we have seen banks excel is having bank data with the retail and business banking customers. The challenge is integrating wealth data along with that to create that universal customer record, which we view as, again, the largest opportunity, untapped opportunity for them to be able to capture. So there's significant value there. They have it, but based off of, fragmented data from different, business lines or legacy or core systems, it becomes a challenge to create that. And that's how we help, banks create a blueprint and understand kind of where they want to go, what that experience needs to be. And it's really all delivered by unifying data. That's step one, but that's not really the end goal for them.
Mm-hmm. Yeah. So how are banks currently, in your experience working with all of these banks, how are they currently using their data? And what are some of the limitations or drawbacks of how banks use their data?
It was interesting. So at the Wealth Access Summit, we surveyed the bank executives, and 100% of the participants said they needed to have insights and that data was going to drive how they were going to provide advice to their customers. But I think less than a third of them had, projects. They were either thinking about it or trying to figure out how to get there. So it's very important in terms of the use of that data, and to be able to really advise the clients whether they need their first checking account, whether they need a retirement income, they're philanthropic, whatever. We had one bank that, and a lot of our bank customers are really focused on the small business owners and being able to service them. Banks are great at being able to do lending, treasury management, et cetera. But they came up with a strategy around exit preparedness, right? To be able to introduce the wealth team along with the commercial bankers to advise the business owners when they were ready to sell their business that they were going to need wealth management. And what we've seen, and I think Jamie mentioned it earlier, the trusted relationships that regional and community banks have in their local communities is amazing. And leveraging data and providing more of a team approach to help their clients, they're able to better serve them. When some customers may not, the first thing that comes to mind may not be wealth management when they think of their bank. They may be thinking of the bigger brands, the Morgan Stanleys, et cetera. So leveraging data and really around culture as well, in terms of being able to leverage that information to provide insights that they could provide advice to their customers is extremely valuable, not only for the bank in terms of their balance sheet and fee revenues, but also for the clients to trust them as their advisor.
Right. And when you say, do you have an example of that, I guess, in terms of leveraging your data, or how a bank could do that? Because I could see just a wealth manager walking over to the lending side and being like, let's have a conversation. But that's not about leveraging data, right? That's just somebody walking to another part of the bank. So What might some ways that the data could facilitate that?
Well, it's interesting. So, we heard one of the banks describe their bank as one bank with a team of experts, right? The commercial banker is great at treasury management and understanding lending in that aspect, but also the wealth manager and understanding how to, provide tax advice or financial planning, really to be able to help people on both sides. But it's been challenging, right? From organizations that are somewhat fragmented in business lines, and I think that's why wealth is really critical, and banks are really going to market as one bank, one institution, and leveraging data when they have that universal customer record. They truly know their client that may have a checking account, but also has a trust account, may have a brokerage account, but also has beneficial interest in a business as well. But really being able to bring that data together, and the insights, once you can see it, it's really amazing in terms of how you can help your customers, right? And knowing, I think Jamie referenced the fiduciary responsibility, but doing what's in your best interest of your clients, or helping to advise them across their entire journey and whatever they need. And I think it's leveraging the capabilities of banks that they already have in place, but being able to collaborate and work together. It's a significant culture shift that we're also seeing at banks.
Yeah, yeah. And it seems like you'd be able to unlock that data as well to see like who your most valuable customers are. Like I'm wondering if you could just use that to be like, these are our top prospects.
Absolutely. We've also seen, based off of engaging customers, the more likely that they can come to your digital experience or your branch and really be able to engage. They're asking for advice, right? They need help in whatever that goal may be. But being able to engage customers and to leverage that is important. And around the best customer, and I would say that most banks would say all customers are probably equally as important, but margins really matter. And segmentation and pairing customers up for the needs that they actually have, right? Do you need a pretty basic retirement plan for income over the next several years, or is it more complex, right? And how do you pair that client up? And we from Wealth Access's perspective, our position is there's one wealth in terms of the digital experience. It's one bank across the organization through digital banking or their wealth experience, but it's also one data. To really enable that data to be portable, to be leveraged in other systems that you may have, whether you're building out your data warehouse or trying to leverage something like Snowflake to provide those advanced analytics, to be able to understand who your customers are, but also be able to align the best advice or the best resources from your organization to help them throughout their journey.
Yeah. And Jamie, feel free to jump in at any time if you have something to add.
If you want me to, I think on that one, you asked for like a real life example, or an example of it is, and going to David's point, you have somebody that comes to a commercial lender and says, hey, look, we're selling the business in 6 months. We need to pay off this loan or this line against it. And we've got a big tax bill coming up. So can you help us with some of the treasury management situations? And at that moment, right, if you know that data, you know that information, it's going into the system. What are the other things that person needs coming up? And some of those things are they need life insurance they never needed before, right? It might be something as simple as that. It might be something where they need to review their estate documents because they were thinking they had a business that was worth $2 to $5 million. All of a sudden, somebody came and offered them 20 for it. They might have significant tax implications, or they might have charitable planning needs. And unless you're picking that up in the data field, a lot of that gets lost. And you'd be shocked at even the best banks out there, how much that doesn't get, as you said, just like walk to somebody else and talk to them about it. Conversation doesn't occur because that person's living their life. They're working with their client, trying to solve those problems. And they're not thinking themselves, oh, they really have a charitable gift shifting opportunity right now. So that's where you got to get somebody who's knowledgeable in that area to come in. But the better you understand that data and you get ahead of it and you can see, hey, look, there's going to be a large payoff of this because the business is selling and leaving. What are those services that person might need moving forward are great to bring to the table at that point. And that's really where people want to get with this data is almost predictive analytics. Clients in this type of situation needed what in the future. And we're getting closer to that out there in the world. It's definitely not something that's perfect yet, but there are telltale signs of certain things that you should be reaching out for. And even just understanding where somebody's rates are. Is there a time to reach out to them and talk to them about refinancing? That's like the classic one, right? You see rates move and can you go help your clients refinance? Can you move things into more secured accounts? Is somebody sitting in something that would be better in a fiduciary, investment account that's kind of sitting and not earning enough? And so those are the types of conversations you are looking for based off the data that's in there.
Yeah. And it's interesting you're doing so much with your data, Jamie, and our bank director did a 2024 technology survey, and we found only 11% of respondents said they use data in many decisions in areas of the bank, and that their data execution exceeded their peers. Only 11%. So 74% said they're in the early stages or see significant room for improvement when it comes to their data strategy. So
it's interesting you say that, Naomi. So my response to that is why is that only 11%? And the challenge could be, for banks of all sizes, right? Not every bank is J.P. Morgan with a $13 billion tech budget, right? How do they get there? And what are the blockers? In terms of being able to do that, is that their core systems? Is that the fragmentation of the business lines? But the opportunity is truly, obviously there's outside opportunities, but within their own four walls, how can they service their existing client base? It represents a significant opportunity, but sometimes data is not portable. Right? It's in one system. How do you get it to the other? We hear a lot about resources, and there's resource contingencies. And although wealth is one of the top strategic initiatives, there's still commercial and retail banking needs that are there. And so really being able to unlock that data and simplify it is step one, but it's also not the end goal. And we see a lot of banks that have similar challenges in terms of getting there and trying to really enhance the experience, but not being able to organize their own data.
Yeah. Yeah. And I'm wondering, Jamie, if you have any thoughts on that, like what can smaller banks do? Say if you're under 10 billion in assets, can they afford the resources even to do this kind of data project you're talking about?
Yeah, it's actually a fantastic question. I'll answer it kind of in two parts. So the first part is, it doesn't shock me that it's like 10 to 20% feel like they're using error improvement
you're breaking up
moving
there.
forward. I think it should be at 74% or whatever isn't enough. So more, but so I think that's one thing. I think look, you don't need massive budgets to make data-driven decisions. What you need to do is know who you are and where you're going, because you can look at one piece of data and drill into that and make decisions around it. So you could look at your data and say, look, we just want to get really, really good at make shoring, for instance, like, every commercial loan we do over $10 million gets a wealth introduction. That's it. That might be the only thing that your bank decides to do, or your division. You don't need a ton of data for that. You just have to drill into one thing and be hyper focused and vigilant on it. If you actually go to, there's a bunch of stories over the years about really large companies when they do massive data projects. They actually sometimes will go as simple as picking one KPI. right? The entire project, while it's got 10,000 things, right? They have one thing that they track to. And it might just be as simple as like how many households have the correct ages in there. And that's it. And they're like, if we can get that right, all the other stuff will go. So I do think if you're a smaller organization, you don't have tons of resources, pick that one driving KPI and know why you are tracking it. Where is that taking you? I think for us, we do know who we are. We serve a very specific region, right? The greater Philadelphia market, Delaware, and South and kind of southern New Jersey. That's our market. We want to double our wealth business in 3 years. We're very specific on those two things. So when we look at data, is it serving that market of our clients, and is it helping us drive that fee revenue and wealth over the next 3 years?
Yeah.
I'm not wondering who we are every morning when I wake up. And if you're being acquired or acquiring people or trying to move states or launching into digital footprints, that distracts you. Then all of a sudden it's hard to make decisions on data because you're not sure who you are.
Yeah, get focused on who you are. That's great advice, right? When your resources are limited. David, did you have any thoughts on that?
I do
What
a couple
banks can
things.
do?
Yeah, a couple things that we've seen. I think it was helpful hearing when Jamie was describing his bank situation with too many systems, right, and some overlap with the various systems. So we've actually seen quite a few banks be able to initiate, or their data initiatives have actually driven lower costs by being able to reduce some of the overlap of various systems. We've also seen, an interesting, and I would be interested, Jamie, in your perspective on this too. But we've also seen, because of the importance of wealth today, also the importance of just generally data as part of the, most banks have had a data strategy or will always have a data strategy. But we're seeing shared budget ownership, meaning that it's not just wealth management versus IT, right? So IT is actually coming together, related to the importance of wealth and looking at fee revenues and other opportunities. But because of the importance of that, it's actually tying into other projects, and also finding partners that can actually leverage their expertise to get them there quicker without having to do it all themselves.
Yeah, I think that ties to one of the things you brought up before too, is that like one bank mantra. I think the wealth and bank world is getting closer, but for a long time it's been kind of an us and them mentality. If you go talk, right, like they were separate businesses, and they were, sometimes had completely separate brands. They sat in separate buildings. I do think pooling that together as one brings that synergy into shared budgets, into incorporating into tech versus having separate tech systems. Now, there are some companies that are just set up like that. It's going to be hard to combine them. But I think if you can, having one team approach is a better approach. I definitely believe in that. I think it's hard to win when you feel like you're in a different team than somebody else, even if you're kind of under the same global umbrella. It just breeds that us versus them mentality. And so we've tried to do that. That's always going to be a work in progress, bringing together different services. But I think we've made a lot of progress, and we viewed our technology rollout as part of that. And then picking partners, this goes to kind of two parts. We haven't talked much regulatory aspects here, but look, digital assets, digital data, all of those things from a regulatory stance are really as heightened as they've ever been. Theft, fraud, criminals online at this point trying to breach data. It's as complicated and as complex and sophisticated as it's ever been. And there's a really high standard out there now to protect data. So when you're looking at partners, it's not just who's got a fancy new startup tech. It's, are they compliant? Do they have a good backup? Do they have good data security? Because really the OCC's position out there now is banks under that umbrella have to treat any third party as if it's your own offering and product. So when you think about partnering today, it's not just, hey, go grab something off the shelf. Like, you have to treat that like it's yours. And one of my stances too coming in was I want to be an integrator of technology, not a builder of technology. Our core function is not a technology company, right? We are not designing and developing tech. We want to be integrators of technology. And even things like wealth access really allow you to swap out the best in class tech behind it without disrupting the client front end view. And I think that's a really important part of like, how do you design that experience where if you need a new tax planning software, you need something else on the back end, that's more seamless for the client because they're not logging into 7 systems. You have a front end that they experience and the back end can come in and out. I do think that's important. I think you need to develop those policies, procedures, and then what will be your policy for finding third-party vendors, solutions, partners that are going to come in and help you get there faster. Because I think in today's world, while you can build programs and tech and apps about as fast as ever before, having secure ones that are going to make it over time is, perhaps equally as hard as it's ever been.
Yeah, that's so important. And where should banks house this data? We talked a little bit about privacy, but where do you just like physically house this data? You were not, Jamie, you weren't good with Snowflake, but.
No. So I actually I do like Snowflake for like single line businesses. You mentioned like the under $10 billion firms. If you have one, I think it's just incredibly hard. It is very popular out there. It's like the darling of the conversations. You go everywhere, and everybody tells you they're building out a data lake with somebody. And I just think I'll kind of wait to see, I guess, is my bigger picture. But like we've looked at that here too. Like we're not looking at those things. But I personally have hesitancy because I've actually watched probably the last 4 years, lots of companies, not just in the banking world, spend a lot of money, a lot of energy, a lot of resources. Fast forward 3 years, and they've really gotten nowhere on that. And to me, kind of the joke at the beginning, like I want to move forward faster than that. Not that that can't be something you're testing out, but there is not an across the board proven track record of companies being able to execute on data lakes and having all that kind of, performative data at their fingertips yet. From where to store it, it's really not my expertise. I'd say most people store in the US. That's about as far as I can go. It's a little
David, do you want to add anything? Do you want to answer that question?
No, I mean it's very helpful hearing Jamie's point of view on this because banks, although regulated, have different viewpoints on this, and from where wealth access sits in, all data is encrypted. All of our data centers are fully SOC 1, SOC 2, SOC 3 type 2 compliant. But I mean, what we do and what we don't do. So wealth access is not a transactional system. We're helping banks to solve a key issue, which is creating a universal customer record, but it's portable, meaning that they own that data and they make the decisions on where they want to send their data, whether it's a new financial planning tool to leverage a client's balance sheet, or whether it's all the books and records, including wealth, that's going to go to another machine learning or other data lake that they may have that they're going to provide analytics that they're already running through at their speed, meaning that they control where they want their customer data to go. And to echo what Jamie said earlier, it's you have to treat it like it's your own. So we're helping to unify and create that customer record so they understand their client at all aspects of every account that they may have with that institution. And we unify that, but and we make it portable, but we don't. We're not choosing how they want to leverage their own data.
Right. And this is just a reminder that those of you on the webinar can use the Q&A box to send over any questions at any time, and I'll get to those. In terms of, we've been talking about privacy and where to house the data. What kind of governance and oversight should a bank have when it comes to their data analytics? Jamie, is this a good question for you?
Yeah, I mean, I'll give kind of the more generic one again, right? But this is really important. Client privacy, client data is of the utmost importance out there. And kind of my other point, like it's at the most risk to some degree that it's ever been, from the sense of people trying to access, steal it, break in, hacks. The numbers there, if you go look them up, like, I mean, it's astonishing how many, fraudulent attacks and banks and financial institutions are dealing with on a daily basis at this point. I mean, that has been the number one rise in criminal activity out there over the last decade, right? Is cybersecurity and cyber actions, and the proliferation of AI. Some of the kind of secondary lines of defense here that everybody thought we were going to lean on are very quickly becoming questioned. And, I find that to be intellectually a very interesting area, that we started thinking about things like biometric data type security measures, like your voice. Well, all of a sudden, some of the major custodial hacks, I don't necessarily know that it's been a big bank world issue yet, but in the custodial world, you've had fraud that's occurred due to people, right, mimicking somebody else's voice, which was a secondary backup from a security measure. So that one's already, right, I think you need 16 seconds or something of somebody talking to basically replicate their voice now with AI. That's, so David and I are done on this webinar, right? Like, it's already over and we can be replicated. And we're not far off of video, right? It's not quite there, but we're not far off of somebody being able to hop on a Zoom and just put up, right, a blurry background and replicate somebody's voice, sit there, pretend to be them, and get through that level of security too. That is going to stress, right, as I say, kind of these second or third lines of defense that we thought were going to be a little bit more foolproof. And it's a challenge now. I mean, I think we're going to have to relook at security long term in a digital world with AI evolving as fast as it is. So I kind of went off a little bit on a tangent. It's just intellectually where I find that very interesting. But that just raises this level of your third party diligence has to be really rock solid today. So understanding the parties that you're working with, continuing to review them over time, and to understand their sub vendors. That is where, at least from my understanding, most of like the data breaches that actually occur tend not to be like banks or financial institutions direct partners. It's their sub vendors that somebody's going down another layer and kind of breaching through there. That's been kind of the bigger risk out there. And so that's a change where sub vendors are really important, and banks like us ask for that information now. We want to know their SOC reports now too, instead of just saying what's yours, because we want to make sure the back doors are locked up and safe too, because client data in this digital world is, actually, funny enough, I have a slide up right behind me that shows the extent that clients find digital assets difficult or impossible to replace. And, financial assets is 61% say those are difficult or nearly impossible to replace if lost. That's a big concern. Interestingly enough, the easiest one that people feel like they can replace are family health records. So I think most people assume that hospitals and doctors still keep some physical version of those if you were to lose them. Really interesting information out there around that.
Yeah, so important. And in terms of privacy, I was even wondering about, just how you approach a client without being too icky, that you're like, you already know all this data on them, right? You've got all their transaction data, and you're, even that feels kind of sticky.
Yeah, and clients have a lot of opportunity to opt out of those types of things, right? So you can actually opt out of having that information shared. You can opt out of any type of aggregation portal. You can opt out of any type of contact information. So like, people can't cross-sell you any products whatsoever at your institution, and you can opt into that. Most of those things are more, opt-in or opt-out features. So there's some type of activity that's typically needed by an individual. But
Yeah.
when you sign up for an account, there's typically a privacy. There is a privacy and kind of data policy that you'll agree to and be informed of, and that'll state where some of those things go. In all honesty, how most people don't read those things. But I do know we had a client read it this week because the URL link, they were asking for the URL link for the privacy policy stuff, and they wanted to read about the data. So I've got at least one client very into it,
One
read all
client
of
who
it.
reads it. At least one.
I don't think it's most people. Yeah, but
Yeah.
yeah, but we do get asked about it every once in a while, and I think it is a good thing for people to ask, right? Like every bank will have a policy, or should have a policy today, and every
Yeah.
financial institution should too. So if you are worried about that, like reach out and ask, and if and if you have concerns about it, raise it. I think that's a good thing for people to know that they have that ability.
Yeah. I meant kind of like when you're having a conversation with somebody and one of your clients, right? And you just happen to know more than they've told you.
Yeah, I would say from like kind of a best practice and behavioral stance, you really don't try to ever walk into a client meeting presuming you know something else about them.
Yeah.
Now, if you know it, right, you ask the question and you say,
Right.
"Hey, like, is anything else going on in life, or is there anything else you need information on?"
Yeah.
You do try to get to that human element. Um, like sometimes I just, I'll do that. I did it with somebody recently. I asked them a question and then they answered me and they were like, I would have thought you knew that. And I was like, oh no, I did. I just wanted to make sure, and they're like, so you're testing me. I'm like, a little bit, I knew the answer already, but,
That's
and
funny.
that's just, I think sometimes fair to people. What do they want to share with you? And if they don't want to go there, that's okay, right? Like not everybody, wants to have every conversation with the same institution. There could be 1,000 reasons for that too. So just because you know something does not mean that your client wants to work with you on that or wants to have that conversation with you. And I think, the best practice of financial planning is to ask the questions, right? And so you start with that. You don't presume you know something. And, that's, to me, that's best practice. And we got to stick to that, even if we have the data.
Yeah, that makes sense. So if I can switch gears for our last question here and just ask about what kind of investment is needed to do a data analytics project similar to what Jamie Hopkins, you tackled. What kind of staffing is needed to make this work? Are there special skill sets that you need inside the bank? I don't know. Either of you could take that question, I guess.
I'll start. Um, Jamie, you've gone through the process, but I guess the last question, just to answer that, at least from my point of view, in terms of skill sets, continuous learning and adaptability. Technology moves really quick, and I think having people in the team that embrace ongoing education and stay flexible, which it's a fast-paced technology environment that may not be as fast-paced at the bank, but really trying to continue to learn and to be adaptable to that part. But Naomi, what we've been working with clients we have 60 banks that we're working with today, and so we've seen a lot of different types of banks and business models. Some more complex, some with just a simple outsource brokerage business. But it really starts with building a blueprint. And when you think about resources, understanding what that plan is, and it actually starts with culture. Like what do you want to be, and identifying some of the blockers, or is there strategic alignment? Is this from the CEO or the board all the way to the organization? Is wealth important? Is what's the data strategy? But being able to figure out kind of what you want to be, then making sure there's culture alignment in terms of being able to get there, and then figuring out data is a critical part of that. So we actually work with banks in terms of figuring that out, getting to know some of their challenges that they have, and really where they want to go to help build that blueprint out. And then also leveraging expertise in terms of, resources are limited, and, and whatever that project may be. But being able to leverage outside resources to really complement other projects that may be underway or going on, and being able to deliver time to value, particularly for smaller banks, but banks of really all sizes, to execute their strategic plans. It's putting that plan together and understanding what the ROI should be and where the investments need to be, and potentially where costs could be reduced as well.
Yep. Jamie?
Yeah, I'll play off a little bit of one of the things that David kind of alluded to is adaptability. I will say one of my former CEOs that I got to work for always used to say it wasn't IQ, but AQ that made you successful. So it's not how smart you are, but how much your adaptability quotient. And I think that's true in technology and data analytics, right? Is you've got to be adaptable. You got to test and learn, and you got to move quickly as you move through this whole process. The other one I've started thinking more and more about, and it was actually, I think, is Frank Blake, who was the former CEO of Home Depot. He said at an event I was at not too long ago, really just about alignment and how important that is inside of a company. And so I even think about like what's your alignment quotient? Like how aligned are the teams on this project? Because talking to a lot of consultants out there in the tech world, the reason that a lot of these data analytics and tech products fail is because the company isn't aligned on where they're going, and they're not aligned around the data decisions that need to be made. Sometimes as simply as like, does it show up as a household? Does it show up as an individual? Like you have to make some decisions on this and get alignment across the organization. And, so I think as you scope the project, who makes that decision? Do you have a steering committee that makes those tough decisions, and then get alignment across the organization? And then think about it inside of a change management process. So I like, there's a lot of different ones. I like one called ADKAR, and it's just kind of a process to walk through change management. And change management's like a circle, right? You got to go back and realign people over time. You got to reinforce it. And that's how you're going to drive adoption, awareness, knowledge, and then eventually get the ball moving.
Yep. That's interesting. Yeah. So you didn't say anything about needing this certain number of data analytics people on staff. The big picture, this is what really matters, right, on a data project is alignment and adaptability. So that's interesting. I want to just thank you all for joining the webinar today, and thanks David and Jamie for joining us. As a reminder, you're going to receive this recorded webinar within 24 hours. We will also post it on bankdirector.com. And thank you so much for joining us today.
Thank you for having